Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories in the world of business. Today we're diving into a filing that looks like it is all about money, but it's really about how a company is borrowing big to get things done. Today we are looking at Wisconsin Public Service Corporation's 8K filing from January 2026. This isn't your usual deep dive into quarterly earnings, but it's super important because it shows a pretty significant financial move. Think of it as a company telling everyone, hey, we're taking out a big loan to fund our future plans. Also, if you like getting straight to the point on corporate filings, make sure you're subscribed. And don't forget to join our Discord community too. The link is in the description. So, what is this all about? Wisconsin Public Service Corporation, or WPS as they're often known, filed this report called a Form 8. Think of an 8K as a way for companies to announce major events that shareholders need to know about right away. It's not a regular check-in, like a quarterly report, but more like a headline announcement. The big news here happened on the 5th of January 2026. The main event, the reason for this filing is that WPS entered into a major deal. They signed an underwriting agreement. Now, what does that mean in plain English? It means they've agreed to sell new debt to investors in order to raise a massive amount of money. Specifically, they're issuing what are called senior notes. This agreement is for $300 million worth of senior notes. These aren't just any notes, they are a specific type called 4.25% series due the 15th of January 2031. Let's break that down. The 4.25% is the interest rate that the company will pay to the people who buy these notes each year, and they're due the 15th of January. 2031 means that the company has to pay back the full $300 million on that date, which is about 5 years from when the agreement was made. So they're borrowing a lot of money for an extended period. This offering is happening under the Securities Act of 1933, which is basically a set of rules for selling stocks and bonds to the public. They've filed a registration statement, which is a detailed document explaining all the ins and outs of this debt offering to the US Securities and Exchange Commission, or CC. Think of the registration statement as the company's detailed sales pitch for these notes to potential investors. Following up on that main agreement, there are also some other important documents listed as exhibits. One of these is the 17th Supplemental Indenture. An indenture is essentially the legal contract that lays out all the terms and conditions of a bond or note issuance. It's like the official rulebook for this debt. This particular indenture was dated the 8th of January 2026, and it involves US Bank Trust Company acting as the trustee. The trustee's job is to make sure the company follows the rules of the indenture and protects the interests of the note holders, the people who bought the debt. So why is WPS taking on this much debt? While the filing doesn't explicitly state the purpose of these funds, companies typically issue debt like this for a few key reasons. It could be to finance new projects, expand their operations, refinance existing debt that might have higher interest rates, or simply to have more cash on hand for general corporate purposes. Which provides electricity and gas. This could mean funding upgrades to their power grid, investing in renewable energy sources, or building new infrastructure to meet growing demand. You'll also see an opinion from Joshua M. Erickson, who is the Vice President and Deputy General Counsel for WEC Business Services LLC. This usually means he is providing a legal opinion on the issuance itself, confirming that everything is in order from a legal perspective and that the company has the right to issue these notes. It is a standard part of these financial transactions, ensuring everything is above board. And then there is a consent from the same Joshua M. Erickson. This consent essentially allows his legal opinion to be included in the public filing, giving investors confidence in the legal soundness of the offering. Now let's talk about the bigger picture here. WPS is essentially taking on debt. This isn't necessarily bad. Think of it like taking out a mortgage to buy a house or a business loan to expand your business. It is a tool for growth. However, taking on a significant amount of debt, $300 million in this case, does come with responsibilities. The company absolutely must make those interest payments on time and then pay back the principal amount by 2031. If they struggle to do that, it could lead to financial trouble, affecting their ability to operate and ultimately impacting shareholders and customers. The fact that they are issuing senior notes is also worth noting. Senior debt is generally considered less risky for lenders than other types of debt because it gets paid back first in case of bankruptcy. This suggests the company is aiming for a smooth and reliable borrowing process. The 4.25% interest rate is also pretty reasonable given the economic climate at the time of the filing, though it is higher than what they might have paid in a lower interest rate environment. Looking at this filing, the story isn't about massive profits or losses announced today, but rather about a strategic financial maneuver. WPS is signaling a need for capital, presumably to fuel future growth or important infrastructure projects. It shows confidence from the underwriters, these financial institutions like MUFG Securities Americas Inc. PNC Capital Markets LLC and Scotia Capital, User Inc., that they believe in the company's ability to manage this debt and that the notes will be attractive to investors. In essence, this 8K filing tells us that Wisconsin Public Service Corporation is embarking on a significant investment phase, and they are choosing to finance it through debt. It is a move that could set them up for future success, but also carries the inherent risks associated with borrowing large sums of money. So, what is my take on all of this? Wisconsin Public Service, as a utility company, operates in a relatively stable but capital-intensive industry. They have a consistent revenue stream which is good for servicing debt. The 4.25% interest rate, while not rock bottom, is likely indicative of the market's perception of their creditworthiness. The risk here is straightforward. If their future investments don't pan out as expected, or if unforeseen economic headwinds emerge, managing this $300 million debt could become challenging. However, for a company like WPS, securing long-term financing is a normal part of maintaining and upgrading essential services. It's not a sign of distress, but rather a proactive step towards ensuring they can meet future energy demands and potentially invest in cleaner, more efficient technologies. The key will be how effectively they deploy these borrowed funds. Alright, that is our breakdown of Wisconsin Public Service Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.